What's up, team? Welcome to Channel Clarico, where we make complex accounting things simple. I'm Andy Wang, and in this video we will be explaining how being an investor differs from being a trader in Australia when it comes to shares and crypto. So whether you're hodling to the moon or swing trading with a 100x margin, you're going to want to know how these differ when it comes to tax. So this video is for you. I'll be breaking down this video into different sections. Firstly, we will look at what the main differences are between an investor and a trader. And secondly, we will run through how these two classifications are different when it comes to tax. And finally, we'll run through a few examples of both, just to help illustrate the point. But before we get into it, quick disclaimer. As always, with anything finance and accounting related, there are exceptions and nuance. We'll just be covering the main talking points in this video on investors and traders and how they are taxed, just to help give you more clarity on which one sounds more like you. But before making a final call on whether you're an investor or a trader, I do recommend chatting with an accountant. With that out of the way, let's dive in. First things first, when it comes to crypto and shares, are you an investor or a trader? Let's start with the extremes on both ends of the spectrum because it'll be quite easy to illustrate. The caricature of an investor is the person who hodls their coins and shares to the moon, of course. This person would generally dollar cost average into the project that they fundamentally believe in, or maybe they might even YOLO into an occasional meme coin. Either way, they're holding. On the flip side though, the caricature of a trader is that Wall Street guy who's got 4 screens up and live charts up constantly, just constantly buying and selling. It's often characterized with a high volume of trades, always buying and selling coins at a profit in a very short time frame based on things like technical indicators. These two extremes are actually pretty easy to spot, and it'll be clear if one of those sound like you. But what if you're somewhere in that middle ground? How do you know whether you're a trader or an investor? Let's start with the trader. In the eyes of the ATO, the Australian Tax Office, it comes down to 4 main things. Firstly, the nature of your activities. Secondly, the repetition, the volume and regularity of your trades. Thirdly, whether you're organized in like a business-like way and you keep good records of your trades. And finally, the amount of capital that you've actually invested. Now, there isn't any one thing which makes you a trader. Each of these things will be looked at together in the context of your situation. Now, rather than going through each of these points, I'll put a link to the ATO website in the description below because they've actually done a pretty good job of giving more information on each of these factors. Instead though, let's sum up the trader for you so you've got a better idea of what these 4 points look like together. You're a trader if you have a trading plan, which essentially is like a business plan for trading. And this trading plan sets out things like your stop losses, your profit targets, how much you allocate into each trade, and you consistently trade based on your trading plan and rules. If you also keep records of all your trades and you track your trading profit, and you've got a system behind your trades, like charting, for example. And finally, if you're trading with a bit of capital and potentially leverage, that helps too. Although, personally, I think the capital part isn't as applicable to crypto because the trading fees are a lot less, so it's not like they eat into your trades. Like I said, it's not going to be any just one thing which swings it, but it's going to be a combination of all those factors which determine you being a trader. Now, the next part is quite easy. How do you know if you're an investor then? Well, if none of the trading part sounds like you, chances are you're an investor. There doesn't have to be much more behind your decisions other than some fundamental research, someone gives you a hot tip. Basically, you buy, you hold, and you take profit when it's eventually realized. If you're not classified as a trader, then pretty much you're an investor. Now that we know what a trader and an investor looks like, How do they differ? The income for an investor and a trader falls into two separate categories. Each of these categories have very specific tax treatments. And this is the main consequence of being classified as either a trader or an investor. The two categories are business income and capital gains. If you're a trader, your income and losses are classified as business income and losses. As an investor, your income and losses are classified as capital gains and capital losses. Let's dive into the business income first. So traders, that's you guys. When you are a trader, all of your buys and sells of crypto and shares are treated no different to as if you were selling mobile phones or clothes. Each time you buy a coin or a share, you're essentially buying trading stock. And when you sell a coin or a share, you're essentially selling your trading stock. Well, hopefully for more than you bought it for. If you're a trader of crypto or shares and you make a profit, the profit will be taxed in your hands at your tax rate. And there'll be rarely any adjustments to this. You'll pay tax on this profit like you would any other business income. On the other hand, if you were to make a loss, you may be able to claim this loss against most of your other income types like wages, dividend, rental income, just like a business. Claiming this loss will decrease your taxable income for the year, and a lower taxable income means you will pay less tax. Trust me, from someone who used to YOLO too hard into speculative shares, this ability to claim losses definitely helps soften the blow. I think I still have some trauma from that. Anyway, now onto the other category that applies to investors. That is capital gains. You make a capital gain when you sell an investment of value for more than you bought it for. You make a capital loss when you sell your investment for less than you bought it for. Sounds pretty simple, right? Just like business income from a trader. Not so fast though. The biggest distinction between capital gains and business income is how the gains are calculated and how the losses are used. When it comes to capital gains, there is an awesome tax concession when you make certain capital gains called the 50% general discount. The concession basically says this: if you buy an investment and hold it for at least 12 months, you will only be taxed on half of the gain. This means the other half is tax-free. For example, just say you YOLO into Dogecoin and make 100 grand and sell it after 12 months. You only need to pay tax on 50K, and the other 50K is essentially paper in your pocket or numbers on your screen. You know what I mean? Pretty good, right? But there are downsides of categorizing income as a capital gain. If you hold an investment under 12 months and make a gain, you'll still need to have the full capital gain on your hands, and unfortunately, no concession will apply. The second downside comes to if you make a loss. Remember how traders can claim their losses against most of the other types of income? Well, if you make a capital loss, you can't claim that capital loss against many other types of income like you can as a trader. If you make a capital loss, you can only apply that capital loss against other capital gains. For example, if you went super hard into Doge and made a capital loss, you don't actually get the benefit from that capital loss unless you have a capital gain to use it against. Now, most of the time you can carry that loss forward into the future and use it against future gains. So it's not like you lose it. That's some concession. But essentially, you don't get the benefit straight away unless you have capital gains to offset it against. Now that we've covered traders and investors and how profits and losses are treated differently, let's run through a few examples. All right, team, it's example time. Let's run through a few examples of what being categorized as a trader or an investor will do to our tax returns in a scenario where we make a profit and in a scenario where we make a loss. Now, in front of you, you're seeing my magic tax calculator that automatically calculates our estimated tax based on our income levels. Now, these are based on the 2022 financial year tax rates for an individual person like you and I. So this isn't for a company or anything like that. Now, there is lots of formulas and stuff which happen to calculate the tax in the background, and it's pretty accurate. So in the magic calculator we trust. Let's run through the profit scenario first. So we're looking at the trader and the investor if we were to make a profit on a sale of crypto or shares. Let's look at our assumptions first. We have a wage of $90,000, so let's enter $90,000 for both the trader and the investor. And you can see this automatically calculates our tax payable. Next, we assume we're buying 10 Ethereum on 1 January 2019 at $100, and we're selling 10 Ethereum on 1 October 2021 at $3,100. That's each. So we're making a total profit of $30,000. You'll also notice that since we held the Ethereum for more than 12 months, we bought it in 2019 and sold it in 2021, the investor will get that 50% discount. So that will come into effect and will be quite important in this calculation. Now, let's look at the trader first. The trader has wages of $90,000 and it made $30,000 on the sale of its Ethereum. Remember what we said earlier, as a trader, your profits and losses are going to be included in your tax return as business profit or business losses. So in this case, we will just put in the $30,000 as a business profit because for a trader, income and expenses, profits and losses is treated like a business. That brings our income up to $120,000. That's what we will pay tax on, and the tax on that will be roughly $31,867. So there's a bit of an increase there. What about for an investor? Well, for an investor, remember, our profits and losses as an investor are capital gains and capital losses, not business profits or losses. And because we held this Ethereum for more than 12 months, we're eligible for the 50% general discount. So instead of putting $30,000 in this capital gain area, we're going to divide that by 2. Remember, because we held it for more than 12 months, we get a 50% discount, meaning half of it is tax-free. So only $15,000 will be included on our tax return. That brings our total taxable income to only $105,000. The other 15 grand, paper in our pocket, digits on a computer screen. And you can see the impact that has on tax. We're only paying $26,692 in tax. There's like a $5,000 odd saving there. How awesome is that? So that's an example how being an investor can trump over being a trader when it comes to a profit and we're holding things over a longer time period. What about if we were in a loss scenario though? Let's scroll over to our losses situation. So in this case, let's look at the exact same scenario, but if we were making a loss. So in this case, we have the same $90,000 wage. The taxes get automatically calculated once again, but at this time, we bought 10 Ethereum for $3,100 each, and we sold 10 Ethereum for $100 each. So we made a loss of $30,000. Obviously, these numbers are not real. Ethereum is doing some great things at the moment. So as a trader, remember our profits and losses are included as a business profit or business loss. And for a lot of situations, a business loss can be offset against other type of income, meaning we will put in our $30,000 loss into our tax return. That brings our $90,000 wage down to a total taxable income of 60 grand, which means we're only paying tax on 60 grand. Our total tax payable is only 11,167. So that really helps to dampen the pain of that loss by us paying less tax, right? And chances are you'll then get a tax refund for the year. Let's look at our investor then. For the situation for the investor, what if we make a loss as an investor? Well, when it comes to making a loss as an investor, remember, losses are capital losses and we can't actually offset a capital loss against any other type of income other than a capital gain. Meaning, if we made a loss on Ethereum, we can't actually put the minus $30,000 in this capital loss area to offset our wage. It doesn't work like a business loss. This capital loss of 30 grand will literally just sit in our tax return until we have a capital gain in the future, which we can use to offset it. So for this year, even though we made a 30 grand loss, we're not putting anything to offset against our wage. We're still paying the same amount of tax. So in this case, well, would you look at that? Being a trader pays off if we are in a loss situation. Hope that makes sense. Now back to the video. All right, team, hope you found this video useful. I actually want to hear from you. Are you an investor or a trader? And what's your favorite coin or stock that you're holding or swing trading? As always, if you have any questions, please pop them into the comment section below. And until next time, Diamond hands.